Tackle today, Matt and Mark Justice Brothers, bringing you all of the charts, all of the analysis, key economic data, earnings reports, all in a concise manner so you can feel comfortable knowing everything that's going on in the market in a couple of minutes. NVDA had earnings after the bell. We're going to get to that in a second, but first we're going to start with the charts. Matt, S&P 500, this is a pretty healthy look right now. Just waiting for a breakout to get more aggressive, aren't we?
Yeah, and you're through a lot of the really important data, and now you can just really kind of see this as a pure technical side of the equation. And if you are looking at it through the technical lens here, this looks like a very good multiple time frame breakout that we have been dialing in. Hasn't really done anything wrong so far in the pattern development. It's been going on for a couple weeks of this consolidation, but that consolidation is not necessarily a negative thing given the V-shaped recovery and the slight overextended nature of the market as it did go through that V-shaped recovery. And now you look at it from a multiple time frame perspective, and this looks like a pretty good little breakout situation happening on the daily with that weekly chart. We're talking about an all-time high breakout, so not necessarily easy to accomplish when you're talking about a V-shaped recovery in a slightly overextended condition. But from a pure technical perspective, the market looks pretty healthy from a potential breakout perspective. RSP looking really good in a high base, little tiny flag base pattern. That looks really good. Nice little hammer candle happening in our RSP here. But when you're looking at the NASDAQ here, a little bit of
this is the chart I'm most interested in personally, because I know the earnings reports you're going to give today. I mean, in technology, they're pretty good. So
well, they're all tech. They're all tech today in from an earnings and a stocks and the news perspective. And this is a pretty decent look from a technical perspective as well. Had a little bit of a pre-selling behavior in the market yesterday, kind of in front of NVIDIA's report. You're not seeing massive volatility post NVIDIA, and I think that's a positive thing, not a negative thing. Looks pretty healthy from an overall pullback perspective, and tech does look like it wants to confirm here. Now we got another day in the week. We haven't seen confirmation yet. Market is sniffing confirmation on this bull flag based pattern that we're seeing in the Qs, but we got to see confirmation. But it does look like a very healthy look, and it looks like the bottom's coming in the short term.
These are very, very attractive charts from a multiple type of trader. We'll talk about that in the Traders Lounge today. But just waiting on a little confirmation here. Matt, the earnings, let's do that. Let's do the economy first. I mean, I'm so excited to get into NVIDIA earnings. I almost wanted to bypass the section that I talk about. Had a trio of economic data come out today. You had a beat, you had a miss, and you had an inline expectations. Now, it's very easy to argue because Jerome Powell made the argument for me that labor is the most important data point in the market. He spent so much time emphasizing it. We had unemployment claims come in today, right in line with expectations. So that's a nothing burger. The second revision of the Q2 GDP, there's 3 revisions if you are not aware of that. The second of the second quarter GDP numbers came in with a slight beat of expectations. That was offset a little bit by pending home sales. But Matt, when I look at these, and I'm looking at economic data these days from a narrative standpoint, is there anything that changes the narrative of a Fed that is going to cut and that we're entering a cutting cycle with the economy holding its own? There's nothing from a narrative change standpoint, that changed for me today. Do you see anything different in the economic data today?
No, nothing changes from a narrative regarding the Fed. The Fed going to cut in September. The only question that we have really there is 0.50 or the 0.25, whether or not the Fed wants to do something a little bit more aggressive on the liftoff to cuts. But no, it really doesn't change the narrative. And once again, when you're going into cutting cycles, the economic data becomes really, really important when you're talking about GDP, when you're talking about the labor market, a little bit more than the inflationary reports, given the fact that the Fed basically has declared victory on the inflationary front, meaning they have, and what that means is they have the confidence of achieving their 2% target by 2025. It doesn't mean that they believe that they have won that battle as of this very second, but they believe the data leads to a conclusion and they want to get in front of any economic, any negativity regarding the economy during this cutting cycle. And so the economic data becomes chiefly important, especially those that rely or specifically about the health of the economy itself. GDP, good print, 3% versus 2.8. So you got a slight beat there. That looks pretty good. When you're looking at the trends a little bit from the economic data, the only thing I'll say in terms of the trends that we are seeing over the course of the last couple of weeks is interesting data on initial claims here. And the reason I bring it up is initial claims, as you can see, is all over the board when it comes to the accuracy of this report. What was expected is very rarely what actually comes in. As you can see, kind of the yellow horizontal bar, that's kind of indicating what was the expectation, the blue bar, what came through. And so when you're looking at this, just not really accurate in terms of expectations. But in the last couple of weeks here, Mark, we're looking at a pretty flatlined ever since we got that negative report in labor, minus 830 odd some thousand jobs that never existed, that had it came out in the revision. Although the labor market data has been really accurate against expectations in the last couple of weeks, right around that 231, 232 level. But in general, yeah, Mark, doesn't really change the narrative, I would say.
Yeah, no, let's get to these bad boys in earnings. Had a 3-pack of tech stocks that Matt is going to discuss. Obviously going to start with NVDA, but some pretty healthy numbers across the board from what you've been telling me.
Yeah, I thought there were some pretty decent reports out of the tech space here today, and one of my favorites that came out in terms of the best report is not even listed here. A firm had a really good report. I'll talk about them just a little bit, but the kingpin of all of this is NVIDIA, and they came out with a pretty good little report. Now, expectations on NVIDIA are extremely high, as is always the case with earnings. If this company produced, if XYZ random company in the market produced these earnings today, they would be up 10%. But NVIDIA has extremely high bars, and they have a little bit of a valuation conversation as well. They did officially come in with beats on EPS. They also missed, they also beat on the revenue side of the equation. I apologize for saying it missed expectations. It actually beat expectations by 4%. Revenue was really positive here. Revenue increased by a whopping 122% year over year. They also increased Q3 guidance up to 31.85 billion, all the way up to 33.15. Gross margins came in above 75%. I can go on and on about the metrics that beat across the board when it comes to NVIDIA. They control the semiconductor conversation, and everything through AI obviously goes through NVIDIA here. I thought they had a really good report, quite frankly. Now, the gap down doesn't surprise me, given the fact that I don't really have a probability assessment on how the market is going to immediately react to an earnings report. There's a lot of things that goes into the immediate reaction of an earnings report. You could have a lot of companies that are basically saying, I'm gonna reduce exposure through their earnings because there's a tremendous amount of liquidity during the earnings analysis. And so you could have a lot of different things going on here. What you did not see today is additional follow through selling behavior yet. And I thought that was a positive sign as well. We'll talk about the charts here in just 1 second. Salesforce came out today, and they actually had a really good report as well. They had a beat against EPS. They also beat on the revenue side. They increased guidance as well. Salesforce is in a really interesting technical situation that I'll talk about here in a second, but they also had a really good report pulling off the hat trick. CrowdStrike, which has obviously been in the news for basically the global shutdown due to CrowdStrike just a few weeks ago. Obviously, they're going to have some recovery coming out of that. But does it show how much negativity they have in their earnings guidance? They came out with beats against EPS. They also beat on the revenue side of the equation. That's CrowdStrike. That's a given. When it comes to the guidance, though, they do decrease the guidance, both in terms of the Q3 guidance as well as fiscal year 2024 guidance as well, obviously reflecting the challenging environment post global meltdown due to CrowdStrike. But again, CrowdStrike's been punished in the last month or so, and so you're talking about something that has already been priced in to a certain extent, and we didn't see the earnings analysis just absolutely get evaporated here. And so, yes, they do officially decrease it. My open question for CrowdStrike is, how much of this decrease in guidance has already been priced into the market? when you're looking at these stocks that did report earnings here today, NVIDIA just a little bit of a gap down situation, but has not shown any additional volatility. I still see this as a breakout situation above 130, and it's a pretty decent breakout situation above 130 as well. And I wouldn't necessarily care about these two pivots here. Now, from an investor perspective, I would say the valuation conversation is a very interesting one, and I could see both sides of that equation here. I don't necessarily see a 45 forward PE ratio as overvaluation on NVIDIA. However, when you're talking about the number one growth stock in the market that has similar forward PE ratios to other companies in the market right now. And so I don't necessarily agree with that overvalued conversation, but I do understand it. From a technical perspective, if this thing breaks out, this is a good situation from a breakout. And I would be looking at those semiconductors. You got a clean trigger on a good stock in the semiconductor space on a breakout type situation with the Qs and SMH starting to show bullish patterns. That looks like a pretty good environment. So tough, not exactly tough. I don't even want to say that. A little bit of a gap down, not a lot of volatility, but really, if you were to tell me coming into NVIDIA's earnings report, we were going to get a doji gap down situation, I'd say no, we're going to get a little bit more market move than that. We didn't. I think that's a positive thing, not necessarily a negative thing. Now, I mentioned Salesforce. Give this a couple days, but if Salesforce breaks out here, you're going to have a really good breakout situation above that 267 level. You look at that on the weekly chart, that looks like a really good reversal, just primed to get up above that resistance level. You're now fighting your longer duration moving averages on that weekly chart as a support level. The daily chart, again, your breakout looks pretty good. So Salesforce probably, in my estimation, has a little bit of a better technical equation than what we're even looking at in NVIDIA, but a pretty good report out of Salesforce as well. Now, on the CrowdStrike front, once again, my question is how much of that negative guidance, which was not as bad as you thought it could have been, is already priced into CrowdStrike here. Challenging technical condition. There's no doubt about that. You got a lot of volatility that needs to be worked out. But once again, not necessarily the worst earnings report out of CrowdStrike, despite the decrease in guidance. We were expecting a decrease in guidance, was not as bad as what could have been following that global meltdown that we saw due to CrowdStrike. And I mentioned very quickly Affirm. There was quite a bit of stocks out there in the market that actually had earnings here. Best Buy had a good earnings. Dollar General had a nasty earnings. But Affirm here, I want to keep my focus on Affirm here as the fourth stock here, because I felt they had probably the best earnings report of the day here, and that does include the shine of NVIDIA and CRM as well. Affirm came in with a negative. Okay, they came in at a negative 14 cents. Now, 2 quarters ago, they're negative 54 cents. Last quarter, they're negative 43 cents. The expectation this quarter was a negative 45 cents, and they came in at a negative 14 cents. That's a really good beat, 61% beat against expectation. They also beat on the revenue side, up 47% revenue growth year over year, and they were not done. They increased forward-looking guidance. The gapping situation is a breakaway gap. You would be putting it on some degree of momentum radar, and this one looks pretty good coming from the low point as well. So keep an eye on Affirm. Had a really good earnings report today, and I would give them the Blue Ribbon Award for the best earnings report today.
Well, listen, let's get to commodities real quick. Only 2 charts I want to highlight this morning, gold and silver. Pretty healthy price action everywhere. 2 of the more interesting actionable patterns from a technical perspective are in precious metals.
Absolutely. Gold looks really, really good here. Has not done one thing wrong. Obviously, we've been talking about a multiple time frame, all-time breakout type situation, and it does look good as it is dialing in that top level. Silver, a little bit choppy price action here against that 30 handle. You got to see that dialed in, and once again, it's got to be a breakout at this point, because anything on the downside, you got too much chop on the intraday and the daily chart. So you're obviously talking about breakout analysis in silver and stocks in the commodity space. Oh, we do like what we are seeing in the stocks in the commodity space. Nice little bull flag based pattern going into a really, really, really important resistance level right around $40 in GDX.
Yeah, absolutely. Listen, we're going to continue these conversations on the Traders Lounge. We love our pro community. Come see what it's all about. Go to tackletrading.com, hit that 15-day free trial, and come join us.